remarked an audacious forecast made by Tesla investor and prospective fund managing partner Gary Black is creating a stir in the financial community. According to him, Tesla is about to experience a gigantic 7x growth spurt, which would revolutionize the industry and present an exceptional opportunity for investors. Are you excited to find out more about this exciting prediction and how it might affect the market? Now, let's get going. Remain calm, enjoy the show, and remember to hit the like and subscribe buttons. According to Gary Black, the price of Tesla shares might rise 7 times. Black is still upbeat in spite of Tesla's issues. Black claims that there is no other way for the price of Tesla stock to rise. Gary Black discussed Ron Barron's forecast that the value of Tesla will reach $4.5 trillion. Ron Barron predicted that Tesla would reach $4.5 trillion in 10 years. Right on Black predicts 20 million cars to be sold for $50,000 each, with a 30% profit margin. $4.5 trillion are obtained by multiplying the operating margin 15 times, by $300 billion in operational income. Barron initially made his estimate in November when he said to CNBC that Tesla's current 2014 valuation will climb by 570% if the company hits the $4.5 trillion milestone. Barron made his first investment in Tesla. His $4 billion holding represents 4% of the company. According to the investor's prediction, the company's valuation would reach $4.5 trillion in 8 to 10 years, and each share will be priced between $500 and $600 in 2025. During the Q3 2022 conference call, Elon Musk hinted that Tesla would surpass Apple in size in Saudi Arabia. He and the investor both agree that Tesla has more than $4 trillion in assets under management. Barron's bullish prediction is based on the assumption that Tesla will continue to grow for 10 years and sell 20 million vehicles annually. He mentioned Tesla's CEO, Elon Musk, and the company's goal of producing 20 million vehicles by 2030. If he sold 20 million cars at $50,000 each by 2030, he would have made $300 billion in earnings and $1 trillion in sales. $4.5 trillion is the result of multiplying Barron's $300 billion stated operational profit by 50. The investor draws attention to the fact that, aside from Tesla's lucrative autonomous vehicle project, there is more of an optimistic case than revenue. Batteries and robots are investments, not the robots themselves. There are cars. We won't be seeing drivers anytime soon. He believes that the importance of robots will surpass that of cars, which explains why Tesla is juggling so many projects at once. Musk neglected to include a human of robots he expects will drive up Tesla's stock price when he predicted that the company's valuation would surpass that of Apple and Saudi Aramco combined. Ron Barron's and Gary Black's predictions for Tesla were quite similar. Although we arrived at that figure independently by 2030, Tesla's valuation of $4.5 trillion by then is consistent with Barron's projections. Under the assumption of a $30 billion market cap and a PE of 30, Tesla's EVS is expected to achieve a stock market value of $42 per share. If earnings per share grow at a compound annual growth rate of 15, that comes out to $12.60 per share, or a total market capitalization of $4.5 trillion. Apart from the apprehensions expressed by the majority of Tesla investors, a growing segment of individual Tesla investors express concern that their involvement on Twitter could potentially harm the electric vehicle manufacturer. Gary Black is in charge of the $50 million worth of Tesla shares that his company, Future Company LLC, owns. In the middle of December, Tesla shares dropped by over 6%, but they started to rise again in late January. Over the weekend, Musk was active on Twitter, attacking the company's former director of trust and safety, criticizing people for giving personal pronouns without asking, and discussing the arrest of Anthony Fauci, a prominent U.S. government medical expert. Warren Buffett claims that in the short run, the market functions like a voting machine, but in the long run, it functions more like a waiting machine. In the long run, Elon Musk has been brought on by the improved Tesla brand. Hiromichi Mizuno, a board member and a longtime Tesla investor, and Martin Vita, the director of investor relations, Ross Gerber, expressed his worries via Twitter to Tesla's board of directors, who are currently in charge of running the business, even though Musk departed to take a CEO position at another company. According to Gerber, Tesla is performing well. He stated that Elon Musk's aspirations benefit the company and that the CEO must be committed to the position. The corporation was headed for its worst year ever after the Tesla stock price fell by 54.31 in December, but the price of the stock has since recovered. Elon Musk's acquisition of Twitter has had Tesla investors on edge for months, as the company's stock dropped by 30%. A lot of individuals pushed the CEO to back out of the agreement and focus on the maker of electric vehicles. Following the acquisition of Twitter in late October, investors' concerns about inflation and a recession weighed heavily on the stock price, and Tesla also reduced the pace at which it was shipping cars. The price of Tesla stock fell like 28 in December. On December 13, it is important to note that while Tesla will undoubtedly be fantastic in the long run, he has no control over the macroeconomic winds. He continued, "I'll make sure Tesla shareholders benefit from Twitter in the long run." The previous week, Elon Musk indicated that he was still working on SpaceX and Tesla, which infuriated stockholders. Prior to that, on a July weekend, Space Exploration Technologies Corporation tweeted that whilst he was nonetheless in charge of SpaceX's test line, the crews there were so excellent that by 2030, he will frequently not be required. It is anticipated that Tesla will have an EPS of $100. A 30x multiple corresponds to a 15% growth in earnings from 2030 to 2035. In 2030, a purchase of $3,600 would yield $1,400 in earnings. Prior to the August stock market volatility, Tesla shares were valued around $232 per. This makes sense given EB, the company's stock has been trading above 200 in recent months. But it is still far lower than it was in July when it was trading at $232. Black thinks that Tesla should buy back some of its stock because it is currently undervalued. Cover this dark way for Tesla's board of directors to suggest how to spend a portion of the company's growing income. According to bull and institutional investor Gary Black, the company's cash reserves have increased and its price-to-earnings ratio is at its lowest point, making this the ideal time for a buyback. He recommends repurchasing Tesla stock. A corporation that buys back its own shares effectively enters the market as a new buyer. Black predicts that the board of Tesla will vote to launch a $10 billion share buyback program, of which $5 billion will be spent to instantly purchase Musk's Twitter shares. This would help Musk's finances and lessen the overhang on Tesla shares and purchases. If Twitter were allowed to run on its own, stock prices would increase, which would be problematic for Elon Musk anyway. After 3 years, Black proposed a buyback. Black claimed the company could easily afford a $10 billion buyback because it has $18.9 billion in cash and $100 billion in free cash that will come from earnings over the following 3 years from all capital expenditures, which would total up to $35 billion for the new gigabit internet connections. His projections cover other projects as well as Optimus Dogo robotic taxis. Black outlined his plan in an open letter to directors who would back Tesla. The letter continues by expressing his confidence in Tesla's business model, product concepts, offerings, and management. The biggest investment in his future fund is the Tesla. This concludes our conversation for today. But click that like button because I'm sure you want to hear more. Get in touch, check out our previous videos, and I hope to see you in the next one.